Hello, this is Maxwell from Chartered Training Center. Today we are looking at IAS 38 Intangible Assets. What does this standard talks about? This standard talks about the accounting treatment for intangible assets that are not dealt with specifically in another standard. Okay, and this standard requires entity to recognize an intangible asset if and only if specified criteria are met. All right, so before we move on, let's understand what an intangible asset is. Generally, we have two types of assets. We have tangible assets and intangible assets. Now, the tangible assets are assets with physical substance or assets that we can touch. Intangible assets, on the other hand, do not have physical substance, so we cannot touch them. Examples of intangible assets are computer software, patents, copyrights, motion picture films, customer list, mortgage servicing rights, fishing license, import quotas, franchise, market share. Intangible assets are very important for an organization, okay, and they give competitive advantage to an organization. So take for instance a brand name or trademark. Okay, now trademark helps the organization to capture market share. For if we take a company like Coca-Cola, okay, it has a strong brand name and therefore wherever you go, people are able to recall or remember or people are aware of the brand. Okay, and so the brand name gives a form of or places a premium on the products that the company produces. Okay, so intangible assets, some intangible assets give competitive advantage to an organization. And some intangible assets also generate economic benefits in the form of cash inflow to an organization or an entity. So example, copyright. Okay, you can get royalties. A company can earn royalties from copyright. Okay, so intangible assets are very important in an organization. Okay, now let's look at definition of IAS 38 according to let's look at the definition of intangible assets according to IAS 38. Intangible assets is an identifiable non-monetary asset without a physical substance. In other words, they are assets that we cannot touch, all right, and they are non-monetary. Okay, they are non-monetary assets. Now, what is non-monetary asset? Before we understand non-monetary assets, we need to understand monetary assets. So monetary assets are basically assets. Monetary assets are money held and assets to be received in a fixed or determinable amount of money. So example is cash. Cash is a monetary asset. Um, Trade receivable is a monetary asset. Any asset that is to be received in a form of money is a monetary asset. Okay, but intangible assets are non-monetary. It means they are not in the form of money. Okay, so all monetary assets cannot be classified as under intangible assets or cannot be classified as intangible assets under IAS 38. Okay, let's continue. Now, in the definition of intangible assets, we saw the word identifiable. We saw the word identifiable. So what is the meaning of identifiable as used in the definition? All right. So identifiability of intangible assets means the asset is capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged. Okay, so identifiable identifiability of intangible assets means that the intangible assets owned by the company can be sold out separately, or can be transferred, or can be licensed, or can be rented out. Okay, but if the intangible assets cannot be sold, cannot be transferred, cannot be rented out, okay, then it does not qualify, or it does not meet the criteria to be recognized as intangible assets under IAS 38. So before we can classify intangible assets, before we can classify an asset as intangible assets under IAS 38, the assets should be identifiable, meaning that we can sell the assets, we can transfer that asset, we can license it, we can rent it. Okay. So example is copyright. We can sell copyright, we can transfer. Okay. Another example is franchise. You can sell franchise. Okay. But an intangible asset like um, goodwill, goodwill cannot be sold or cannot be transferred. Okay. So here, identifiability criteria will not be met. Okay. So for goodwill, it is classified as intangible asset when there is a business combination, or when a company acquires another company. That is where goodwill comes in, or goodwill is treated as intangible asset. But internally generated goodwill cannot be classified as intangible asset because we cannot sell it. We cannot sell a company's reputation. It's not something that can be sold. Okay, but is that something like software? It can be sold, it can be transferred, it can be rented. Okay, so it meets the identifiability criteria. Okay, and also identifiability also means where an intangible asset arises from contractual or other legal rights. Okay, so if a company enter into a contract with another entity, okay, and in the contract an intangible asset is created, all right, that's also qualifies or meets the identifiability criteria. Okay, so the in the nutshell, identifiability means that the assets can be sold, can be transferred, can be separated from the entity. And also, identifiability means that the intangible asset is created or was created as a result of a contract between the entity and a third party. All right, let's continue. Now, what is the definition of an asset? We have intangible asset is an asset, so we need to understand the definition of an asset. Okay, an asset is a resource. Assets are resources controlled by an entity. Okay, so any resource that a company controls. And two, the company expects future economic benefit from that asset, or the company expects future economic benefit from that resource. Okay, that resource qualifies as an asset. Okay, so an asset is a resource that is controlled by an entity, and the company or the entity expects future economic benefits from that resource. Okay, so it means that intangible assets is a resource and it should be controlled by the entity. And the company or the entity should also expect some form of economic benefits flowing or arising out of that resource to the entity. Okay, let's look at some examples of intangible assets. We have patents. So, what is patent or what are patents? Okay, patents grant exclusive right to the inventor for a specific period, allowing them to prevent others from making, using, or selling the patented invention. Okay, so if an inventor comes out with an invention or comes out with a new technology, the inventor can go and patent that technology. And by patenting that technology, it means that nobody can can copy that technology, or nobody can copy, nobody can try to do something similar to what has been done. All right. And the patent gives the inventor the exclusive right to be in charge of that invention or that technology. Okay, so it is a form of what intangible assets. Okay, so holding patents allows you to have exclusive rights to manufacture a particular invention without any other person or without competing with any other person. Okay, so it is a form of intangible assets. Let's look at copyright. Copyright is also similar to patent. Okay, so here it has to do with work of artistic nature or musical nature or literary nature. Okay, so when you are maybe you have written a book, okay, and you have copyrighted it, it means nobody can use or display or distribute or reproduce your work without your approval. Okay, so copyright is an example of intangible asset. Okay, we have brand names and trademarks. Okay, brand names and trademarks are also intangible assets because they help in brand awareness, brand recognition, and they help the company to capture large market share. Okay. Okay, so IAS 38 does not apply to some intangible assets. Okay, even though IAS 38 deals with intangible assets, some intangible assets fall outside the scope of IAS 38. Okay, so what are these intangible assets? Deferred tax assets. Okay, IAS 38 does not deal with deferred tax assets. It does not also deal with leases of intangible assets accounted for in accordance with IFRS 16 leases. Okay, so when you lease an intangible asset, okay, you have the option to treat that lease or that transaction under a lease, okay, under IFRS 16 leases, or you can decide to treat it under IAS 38 intangible assets. So if you decide to treat the lease of an intangible asset under IFRS 16, then it means IAS 38 will not apply. Okay. The Another example is intangible assets held by an entity for sale in the ordinary course of business. IAS 2. So intangible asset held as inventory, okay, is outside the scope of IAS 38. So these intangible assets are dealt with under IAS 2. So intangible asset held as inventory is dealt with under IAS 2, not IAS 38. Okay. And also, IAS 38 does not apply to assets arising from contracts with customers under IFRS 15, revenue from contracts with customers. Okay, so any form of assets arising from IFRS 15, revenue from contracts with customers, are outside the scope of IAS 38. All right. Now we can have a situation where we have an asset, and the asset contains both tangible and intangible assets. So in that case, should we treat the assets as intangible assets, or should we treat the assets as intangible assets? Okay. For instance, you buy a computer system. Okay, the computer hardware is a tangible asset, but you buy an operating system. The operating system is an intangible asset. So are we going to treat the computer as a tangible asset separately and then the operating system as an intangible asset separately? Okay, so the standard says that when uh, such a situation is encountered, judgment should be used to determine which asset is more significant. Okay, so if we have a computer which is a tangible asset and it has an operating system which is an intangible asset, we have to decide whether we are going to treat everything as intangible assets or as a tangible asset. Okay, so the criteria for judgment is which of the assets is significant. So if we take operating system and computer, which of these two is significant? So obviously computer is significant here. So it means that we will treat everything under PP or IAS 16. All right. All right. Now, there's one exception to the treatment of intangible assets. Okay, so when um when an asset when an intangible asset such as motion picture films, video recording, plays, manuscripts, patents, and copyrights are leased. Okay, when these assets are leased, okay, they are still treated under what? IAS 38, even though ideally it should be under IFRS 16 leases because it has been leased. Okay, but these particular intangible assets, okay, fall under IAS 38 when they are leased. Okay, so we have to bear this in mind that when intangible assets such as motion picture films, video recording, plays, manuscripts, patents, and copyrights are leased, okay, they still fall under IAS 38 instead of IFRS 16 leases. Okay, now let's look at acquisition of intangible assets. How do we acquire intangible assets? Intangible assets can be acquired through the following means. One, purchase from external parties. Yeah, so we can buy the intangible assets. So example, franchise. Internally generated. Intangible assets can also be generated internally. Example, customer list. We, it can also be acquired through business combination. Example, goodwill. Then intangible assets can also be acquired from the government. Okay, so the government can give an entity license to operate TV or TV station, or the government can give an entity an import license. All right, so these are the various ways that intangible assets can be acquired. All right, so that ends our lesson. So we will come up with lesson lesson 2 under intangible assets. All right, so I will encourage you to subscribe to our YouTube channel and watch out for our next tutorial on intangible assets.